All right. What's good, my people? It's your boy Chike Investing back here with another daily review of NQ and ES. All right. We're gonna be going over higher time frame to lower time frame. What has happened on each, time frame that's relevant, right? But also we'll be learning the ICT22 model. This is the flagship model that we teach on this channel, right? This is the model that is so simple. ICT said that he would teach this to his daughter, right? If he could teach his daughter any model, it's going to be this one, right? So this is something that you should really watch, see it through, and it's important to go from higher time frame to lower time frame because on this channel we also say higher time frames trump lower time frames, right? And if you can understand where the drawn liquidity is or where price is drawing to on a daily 4 hour, 1 hour, it can make your scalps on the 1 minute, 5 minute, 15 minute a lot more, confident, a lot more accurate, and a lot more probable, right? So that explains what we're doing today. If you're excited about that, or even if you're just a good person, you can just press that like button. Press it, 3, 2, 1. You can press it right now. That's great. Thank you very much. And you can also subscribe, press that notification bell so that you don't miss a single daily review. This is going to help you on your day-to-day trading, at least help you get market context for the next day, right? Like at least you can go in the next day. If you're not sure where price is going to go next, you can hear from someone who's been a little bit more experienced on what they think is going to happen on the next day. And I do this every single day. So this is my form of payment. Make sure you press that button. And also I have a free Discord, lastly, that you should go check out, right? Free link below. Go watch that. Check out that Discord, and feel free to join. And you can see what trades I'm actually taking on a live basis. You don't have to wait till the end of the day to see which trades I'm taking. So without further ado, let's get straight into this daily review. Let's start with the daily candle. So we started off, and here I'm actually going to press the replay button here because the replay button here because I don't want to see the newest day. So this is today, Monday, right? Today was a no news Monday, right? No news Monday today, no USD news ahead of CPI this week, right? I believe Fed Chair Powell is speaking on Thursday. A lot of news coming out later in the week, right? So we could have seen a pretty choppy Monday. There's no news, and it's a Monday ahead of some pretty high caliber news coming in the week. Today could have been a very choppy day. Very large moves last week. So, I wanted to wait until I got into the 9:30 open to see how price could open up. We did get some really good pre-market trading. So a lot of times on a Monday, if there's no news, you can see the market move pretty well pre-market, especially if you see some large moves happening. But then once we start to open, it can get pretty choppy. But today we actually saw price perform pretty well, drawing back into the new week opening gap. So we'll go into that. There's some Mondays where even though there's no news, like they can still see some pretty good price action. And today was one of those days where price action was actually pretty nice, which is why you always kind of want to see how Mondays perform. But if you notice that you're losing a lot on Mondays and Mondays are just your day to lose, then you should just get out. You should just not trade on a Monday. It's not worth it. But if you're a little bit more experienced like myself, then maybe Mondays could be worth trading for you. So I did take a couple trades today, and it was a positive day for me. So glad to go over what some of those ICT22 models I took today. So let's start with this daily candle, right? Today is a doji, which means that we opened up higher, came lower, took out the previous day low, right, and then closed back into the range of this previous candle. So this previous day high and previous day low was both taken out, right? So notice what's happened here. We've moved a lot over last week since last week was the election, right? And people were pretty bullish. We took out all-time highs over here, right? And now we've seen a day where the daily candle has taken out the previous day low and high. That is typically a day where you can see a revert. The next couple of days, you can see a reversal back into the range, right? So maybe back into some of these inefficiencies here, maybe come back to equilibrium of this move, right? This is what we will call a reversal candle, right? Because it's taking out the previous day high and low. You can see that typically reverse, right? So especially because we're at such a premium and we have these levels here, we could probably come as low as this breaker over here, but we do have this breaker over here as well, right? Which is this line right here, 1, 2, and 3. Right, 1, 2, and 3. It's overlapping with this weekly SIBI high over here. So you can't really see the third candle here, but this whole series right here is a breaker, right? So that's projected over here to this line, and then this line. That's like overlapping with the weekly SIBI high line right here. And so you could see price probably coming back down there, but not closing through this breaker level, right? Wouldn't want to see it close back through because that would be bearish. But we can see this breaker supporting that as well as these fair value gaps, these BISIs, that could send price higher, going forward over the month, or the next couple weeks. But for the next couple days, I'd like to see lower pricing, and I've just kind of explained why. So that's what happened on the daily profile. Let's go over to the 4 hour. Oh, also on the daily, you did see we did actually come back into this daily BISI right here. So we may not even make it as low to this breaker. We could actually expand higher. I want to see how we interact with the wick right here. If we can close through this wick, we'll probably come see lower pricing throughout the week. But if we stay above this wick after it's tapped into this BISI, you could probably see price going higher. I mean, I always talk about on this channel, if you have a wick like this and you see price only closing the upper half of it, it could continue to go higher, right? Similar to any PD array. By the way, if you're wondering what this green line is, this green dash here, this is the TGIF range of last week. So the 20-30% of last week's move. A lot of times you've seen a large move like this, you could see price return back to the 20-30% range of what the weekly has moved. And that typically happens on Fridays, but if you didn't get it on a Friday, which we did not here, right? You can get it on the next Monday, which we did not. So, I mean, this could still be a level that I'm not 100% certain, but maybe be something we could revisiting. So I'm just going to keep it on my chart. On the 4 hour, what do we have today, right? So make this a little clearer. Oh, so ugly. All right. On the 4 hour, right? What do we have? We had this high here formed Thursday, right? Friday at 6 a.m. we made this low, and then coming into today, we had this wick here from Sunday, and I wanted to show you something. This is one of the reasons why I thought we would have a bearish morning. One of the major reasons why I thought we had a bearish morning. And what I just told you literally just now. If you have a wick like this, see how we're closing in the lower half of this 4 hour wick, right? Like, and we also had a new week opening gap that was right here. We'll go into that in lower time frames, but we had this new week opening gap that is a basically, if you don't know what new week opening gap is, right? It's the close between Friday at 4:59, I believe, until Sunday's open, right? If there's a gap there, price could look at that as an inefficiency and need to return there based on ICT's models and concepts, right? So we had that as a draw. Plus, we're in such a premium, right? And I'd like to see us return back to that daily BISI below that we talked about before. That is below this previous day's low. That's the daily BISI. We have targets lower. Plus, we have this TGIF, right? And we have this breaker over here. We have targets lower. I know that there's draws lower, but that doesn't necessarily mean that we're always going to go there. So how do I know that we're going to go there, right? We are reacting right from this PD array, which is this wick, in the lower half of this 4 hour wick, right? And you see that we close here in 1, 2, and then the third candle as we open in 9:30 open, we start to expand away. That to me is screaming that, hey, we're probably going to see lower prices for the day, right? And so that's that on the 4 hour. And then we basically took out the previous, we took out this Friday's low, previous day's low, after taking out the previous day high up here. And we came back into the range, wick back up. And then now we close below the concentrated encroachment of this 4 hour wick, not making it back up to this semi. So we could see us returning back into this, right? Because that would be the ERL right here, back into an IRL. ERL is external range liquidity. That is a low. That is, not part of the initial move, right? That's a way you taking out a low. You take out a low like this, you can return back to the nearest fair value gap, which is the IRL, internal range liquidity. And then depending on how we react with that, right? Or if we don't even get there and we stay in the bottom half, and I'm going over a lot right here, but just try to follow, right? So if we stay in the bottom half, if we close above the upper half of this wick, we could see ourselves return back into the fair value gap. But if we stay in the lower half of this, right, we've already kind of like opened the next candle in the upper half here. Not sure what that means. But if we stay here and we don't decisively close above this concentrated encroachment, we could just go lower and leave this gap open, use it as a breakaway gap, and then continue to go lower to the TGIF range, maybe back to some of that breaker and then some of these inefficiencies over here. But if we stay, if we close through this and we get here and we close above the concentrated encroachment of this 4 hour city, we can continue to go higher and leave some of those other inefficiencies open, because think about this as well. There's a wick right here, right? And we've tapped that already and we're going higher. So it's 50-50. We'll have to see how we open up tomorrow. Not really sure what the bias would be on a 4 hour. Maybe what my bias would be based on what we saw on the daily. So we'll just have to go with that for now. Let's remove some of those levels. It's not too distracting. Let's actually keep that here, and let's probably lower the transparency a little bit. So that's distracting. Okay, so this is the 4-hour wick. Let's just keep that there for now, right? 4-hour wick. So overnight, we have this new week opening gap, right? So you see that, right? At Friday's close to Sunday's open, right there. New week opening gap. That is a gap, right? That price needs to come back and fill, which you see we close all the way completely through it at that 9:30 open. So we are hovering overnight, right? This is Asian right here. We're hovering in London, hovering in the bottom half of that 4-hour wick, right? We take out these two highs right here and make a 3-power drive, right? 3-power drive, and you see 1, 2, 3 highs like this. This is also another bearish indicator. ICT talks about that. We've taken out this liquidity over here. We've left all these LRRs over here. Plus we have a 1-hour inefficiency right below this low, right? So that's called order pairing, where price could draw here. Plus we have that daily CIBI, daily BISI that is below this previous day low here. The low here is what starts that daily BISI on a daily time frame. So I saw this 3-power drive. Saw we were respecting the lower half of this 4-hour wick. And we're in such a premium and we have major draws in liquidity, like all these LRRs right here, plus these 1-hour. We've taken out everything over here is already made jagged, but a lot of this stuff is still too smooth. So when I'm coming in the morning, plus you have this new week opening gap that was left open as well. I'm like, yeah, everything is screaming, confluencing bearish. And that's how I developed my bias. And the reason why it's important to develop your bias is because when you develop that bias, you can use that to make your trades a lot more profitable. You should only be trading in that direction. Don't take a 22 model if you don't have a bias. If you don't know where price is going to go, then don't enter a trade, right? Like that's just the fact. And if you get your bias wrong, log it, and then next time you know what your bias is. But whenever you're entering a trade, you should have an idea of where price is going to go on a higher time frame or on the same time frame, based on where the liquidity is at, based on what you're seeing, how we're reacting with PD arrays, because that will just make your trading a lot more profitable. You'll also be more confident when you're holding things. Like it can gyrate a lot because you're not sure where price is going to go. But if you're highly confident that there's a reasonable probability that price should be heading in this direction, right? So you'll have a lot more confidence in your trade. So what do? Right before, during pre-market, we make another high, take out all these highs here and do a 3-power drive. And then coming into the open, right, actually just right before we actually started this move, but the 9:30 open exacerbated it. We expand lower, fill the new week opening gap, right? On the next candle here at 10 a.m., we come back and tap the new week opening gap again, but don't even close inside of it, right? We're still showing bearish pricing, right? When you see this, and we're not even closing inside of it again, that's where we're respecting it as a premium right now to continue heading lower to this low over here in this 1-hour fair value gap, which we do end up touching by about the end of the 1 o'clock hour. We come back and rip up immediately, and we come back into the range and tap the new week opening gap again, right? So that is the 1-hour log. On 15-minute, you see that 3-power drive even a little bit more clearly, right? That happens overnight. The London took out Asian's high, but you see coming into pre-market, we took out London's low over here, but Asian's low is still intact, right? So that could be even something that is an easy target as well. That's Asian's low. By the way, remember I talked about last week, if London took out Asian's high and low already, then that could have done a seek and destroy profile where, I would expect this morning to be pretty choppy. But you can see Asian's low is still intact, but Asian's high only have been taken out. And both of that have been taken out. That is what can classify a pretty easy seek and destroy profile. T-Trades has a really good video on ICT daily profiles. He talks about that as well. So we take out this high over here. We form this 15-minute fair value gap. Right, when is that? Around 8:15 a.m. By the way, because it was it's a Monday with no news, I actually was trading pre-market. So I was coming in here saying we haven't done too much overnight. There's not a large moves. Asian high and low are still intact, so price could still move pretty cleanly ahead of the 9:30 open. We see 15-minute. Let's get a little closer here. We see the 15-minute start to invert this fair value gap right here after making these rejection candles. Right, we're working higher, coming back into the range. We invert this 15-minute fair value gap right here, form a bearish order block off of it, continue going lower, right? We take out Asian, take out all these LRRs, and then at 10 a.m., we reverse back into a 15-minute CIBI that is overlapping with the new week opening gap level. You can see we touch the constant encroachment of that new week opening gap right here. Price reverses lower, ends up taking out previous day's low, also tapping that daily BISI and that 1-hour BISI. bursting back into the range, inverting these 15-minute fair value gaps right here, and coming back and touching the new week opening gap for this session, right? Completing that at 4 p.m. So we had a day where we dropped, and then around the PM session, after we've taken out all the key liquidity, right, reacting from a 1 hour BISI here, showing clear rejection and clear reversal tactics here, like we're seeing with these wicks, reacting off that range and closing inside of the range and not below this low. We're closing inside of this low, right? If we close through that low, we could probably continue ourselves to see going to the TGIF, but you see we did not close through it. Instead, we wicked up and came back in and inverted this level, right? Came back and touched this redelivered rebalanced price range and just a little bit of this BISI right here, the BPR, and reversed higher for the day. So that is a PM reversal. That was an AM downtrend, but a PM reversal. Daily profile right there on the 15-minute. 5-minute. Don't want to waste too much time here. We do see the beginning of a 22 model, right? Let's just kind of skip all that's going on over here. It's pretty much similar, right? Make this big gap that act like a breakaway gap, right? It stayed open. We have this inversion fair value gap here. Plus we have this redelivered rebalance price range right here, because price is like, wicking back and forth. This is already rebalanced. Could keep this level from trading back into. And we have this 15-minute inversion fair value gap that that happened, and then price is reacting only in the bottom half of it. Remember I told you, if you see price only closing in the bottom half of a PDRA, that's also screaming bearish. You take out this short-term high with this wick, break market structure, come back into this fair value gap and sell off. So that is the 22 model, right? So the 22 model, those of you who have not watched our channel before, this is something that you're just learning for the first time. Low, high, that purges this high, breaks market structure, returns into a fair value gap, and goes lower from there, right? So over here, you could see price going like this, right? Or you could see price, maybe it was going up. Either way, price takes out this high right here, whether it's a continuation of a downtrend move and having just a continuation purge of liquidity, or if we're completely reversing after hitting a key time frame PDRA and we break market structure, fair value gap shows displacement, price continues to go lower. So there needs to be three things that happen, right? There needs to be a purge liquidity, break of market structure below this low, and then we have a fair value gap that needs to be in place. Now, we don't always need to return back to that fair value gap. Sometimes we can just come back to this low, or we can come back to a breaker here or an inversion fair value gap and just keep going lower. So that's the 22 model. You see that forming here. Taking out this high, took out this high, right? You look at that carefully. This high, took out this high. Right, so you see this high, take out this high. Break market structure below here. Form a fair value gap. We return back to that fair value gap. By the way, how did I know I was going to turn that to that fair value gap? Sometimes if we close below this low, we may not get a return back to that fair value gap, because that would validate this breaker really well and that there's like really bearish price action. And sometimes this gap could stay open. Or if there's like an inversion fair value gap right here and it keeps price from coming back in there, but there's no inversion fair value gap. We did not close below this low and we wick. So I'm thinking price can come back into this fair value gap at the very least. And this is where you're taking notes, guys. This is where you should be taking notes. Price does not close in that fair value gap at all, and we start to expand lower, right? Going into the 9:30 open. Now, some people don't take trades going to 9:30 open. I am confident about taking trades at 9:30 open now, because like I taught in this channel as well, right? Like 9:30 open is right here. But if you see price like showing bearish price action, we're purging key highs here and we have somewhere to go. It's an obvious draw on liquidity. Basically, price is telling you beforehand, hey, I'm getting ready to use this 9:30 open as a means to explode to my targets, right? And so I saw price showcasing bearish action along with my buys pre-open, and I'm like, okay, I'm going to use the open to get in line with my shorts. Now, sometimes when you're doing this, it can be a little volatile. So I like to, if I'm like in profit, like I like to set it to break even just in case we have like a large spike in 9:30 open, Judah swing. Like, I was already in profit by the time we got into 9:30 open, right? We were like around right here before 9:30 open. So I set my stop to break even so that even if we come back and we touch that fair value gap, like I wouldn't want to see that. I just want to see this go lower, or I wouldn't want to risk that, taking any loss. Or you can set your stop loss above this high, right? And if we break above that high, I don't want to see that. Like, that's not good. The best 22 models are where you see like that and you close out of it and it just continues to expand away, right? I don't want to see price come back up there. So, and plus it's just being safe, right? Because anything can happen at 9:30 open. We get a spike above here. Like, I just want to set a break even. So that's what happened. It was actually a better entry on the 3 minute, which we'll go over in a second. But what happened? We made a low around 10 a.m. Came back out to the new week opening gap, inverted this particular 5 minute BISI, and because we still had this area here, I was still bearish. But the reason why I stopped trading after exactly around here, 10:40, right? Like if you're an inversion trader, you would have taken this, but then that would have ended up being a loss. That's okay. People take losses. But I'm a 22 model trader. I didn't see a 22 model here. I did not take this. And we inverted this 5 minute fair value gap. But when we came back up and closed through the consequent encroachment of that fair value gap right here, we came back and closed to that consequent encroachment, and we closed back out of it with decision. I was like, okay, we're probably just gonna be choppy for the rest of the AM session. It's a Monday with no news. We've moved a lot already. We've hit a lot of objectives. We closed in the new week opening gap. We're taking out Asian low, right? We're taking out all these LRRs. Like on a Monday with no news, like I'm not expecting price to deliver all the way to my final target immediately, right? Like it could take all day for the rest of the day to do that. And so you can see here, it's very choppy, right? Very choppy, candles overlapping themselves. Like this is telling, once we had this back and we return back and we're not respecting this 5 minute fair value gap to continue going bearish, I'm like, okay, we could chop for the rest of the range, right? That's me. That's immediately what screams out to me. We can chop for the rest of the range. Price ends up coming back up to this new week opening gap, closing the bottom half of it. We go lower and then we continue that move going lower. What time we started chasing up? 10. We reversed into the range. Then we continue that move going lower after 11 o'clock. Made the low around 120 and then created this really bullish 5 minute order block off this 1 hour 1 hour fair value gap below the previous day low, also tapping that daily BISI, leaving fair value gaps in the way, breaking market structure above here. Now I took this long on ES. I'll show you that because that's a 22 model right there, and it was actually on 3 minutes. I'll wait, but high. Well, actually, this is exactly why I didn't take it on NQ because actually, if you look at it closely, there's not really a low here. There's no low. I would say the only 22 model I could really see is like this low getting taken out by this low. This high breaks market structure, fair value gap right here. But notice how we don't even come back into this fair value gap. Why does that happen? Look at how high we close above this high. That's telling you that price is likely to leave this open when it closes above this high like that. Price could either just come back in here immediately or can continue to expand. So when I see something like this, probably on this candle, on the third candle, once the fair value gap is formed, like that means the 22 model is present. Now the best optimal entry is when it comes back into that fair value gap. Okay, place it below the breaker, EM for 1 to 3. We would have gotten, but we did not come back into that fair value gap. We didn't, right? So once that closed, and I'm anticipating because we closed above this high right here with such strength and speed, and we're such a deep discount, we have such these juicy LRRs liquidity right here, right? We just went lower all day. It's okay if your RR is not the best. Like you can just get in right here without it returning back to this fair value gap, and aim for your 1 to 3 if you want. You wouldn't have gotten that, but once price got about halfway, take out half my trade, set the rest to BE. Once it's 4 o'clock, just close out all my trade. You would have made at least 1 and 2.5 right here, right? So you can see you don't have to wait for it to enter your fair value gap. And then price just continues to go higher for the day. Let's move on to the 1 minute. I know I said I'll go over the 3 minute trade, but let's just go over the 3 minute. So I'm just gonna go to the parts where we had the trade. So here on the 3 minute is where I took that 22 model short in the morning, right? Aiming for this low right here, Asian low right here, new week opening gap right here, very easy, pre 9:30. Enter here at the low of that fair value gap. Stop was above this breaker right here. Plus you have this SIBI, right? You have a wick right here. You have an inversion fair value gap right here on a 3 minute. So that's 3 PD arrays. That was above. In for 1 to 3. Got that pretty much in how many candles? We stayed here 1, 2, 3 candles, expanded away, came back, touched my BE for a little bit. But in that same candle, you can see we took me out before I would even stop to break even right there, right? So I got taken out. That's 1 to 3. I was done for the day after that, unless I saw something super clean. That's the only thing I wanted to show in the 3 minute, but let's just go over the 1 minute real quick. Purge liquidity, continue going lower, 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 lower. Don't get to that final level yet, but we've taken out so much already. And right here, we had SMT with ES. Right here at 122, right? 122. No, sorry, wrong time. Right here around 10 o'clock, you see we touched the low of ES's new week opening gap. So ES is reacting from a PD array. Plus, ES took out this low right here with this low. But on NQ, at that same time, right, 1023 right here, we did not take out this low. That's an SMT. And that is the only reason why at that point I would have trusted actually going long there. Because normally if we have not gotten to our final targets, like I don't believe price is going to reverse yet. But because we've moved so much and we had that SMT and ES has just tapped its new week opening gap, so it's reacting from a PD array, that gave me confidence that ES and NQ could rise. We had this low right here. You have this high, right? It's very hard to see, but you have this low right here. You have this short-term high, right? This short-term high right here. Takes out this low, break market structure. You have a fair value gap right here. Probably would have entered on this candle, just given how high we've closed above this high. Would have entered on this candle once that closed. Price goes higher. We come back down. Probably would have thought me BE. That's fine. But then we have another 22 mile forms, right? Because we have this low, this high, this low. Takes out by this high. Fair value gaps right here. Entered into the fair value gap right here. Because we have this down close candle, even though we closed above this high, or even though we closed above this high pretty well, like even this is a 22 mile right here. This high, this low, high, lower low. And we closed above that with speed. But because we had this candle wick above this one and come back into the range, I'm thinking that we could be bearish for the next couple candles. So it would have gotten a better RR fill at this first fair value gap. Keep it below, you know, this price action right here, this breaker. Plus like a lot of wicking right here, a lot of balanced price action. Plus you have this fair value gap and you have this inversion, very tiny inversion right there. In for 1 to 3. Admittedly, I did not catch this because I closed my charts. I was like, I already made money for the morning till Monday with no news. I'm not trying to be that aggressive, but this has been really textbook. Honestly, kind of sad I didn't take it, but that's okay. I made smart R2R choices today. And that was that. Probably started chopping around for the rest of the morning. And let me show you one last one, right? So price chops around, we create all these LRRs. We come out and take this 1 hour thing around 1 to 120. Come back in the range, take out these equal highs over here. Consolidate for a while in this breaker. Consolidating for a while in this breaker, and then eventually go much higher, go to new week opening gap. I actually took that long right here. Not here, but once it was like a 3 minute long. So once we have this low right here on ES, lower low, break a market structure, create a high, fair value gap, we go higher, come into this fair value gap right here. Once we came in there, I took a long because ES has been really bullish. Like we've made a higher high on ES like a long time ago relative to NQ. And like notice how we even like it was hard for us to get to this new week opening gap, but NQ like went right through it in the morning, right? So ES has typically been a lot more bullish. So I wanted to take a long on ES, not on NQ. But I mean, just notice how crappy that action was. Like honestly, the better move was on NQ. So that's why I like to just focus on NQ. Really not to try to take too many trades on ES. So that is a good thing just for me to continue to go for it in the to keep in mind going in the future. Oh, gosh, yeah, can't speak. But let me just show you this really good 22 model that ES had on the 1 minute. You have this low right here. Thinking about that low, break a market structure right here, fair value gap right here. Price goes higher. but you know, we didn't really get anywhere. So you could have just set your stop to BE and then probably just get stopped out at some point, but at least you didn't lose any money. On NQ, once you had this low, high, lower low, aggressive close above here. Once this candle closes, I'm holding that. I'm going to enter right there. We go higher, continue higher, right? And that would have been a nice 1 to 3. You can look at that. Admittedly, because this was a down close candle, I would have probably waited to get into the fair value gap. So I probably would have missed that. But in hindsight, it's a very small down close candle. It's a doji. Plus, we're reacting from a daily BISI and a 1 hour BISI. And we're taking out so many pieces of liquidity. And we're such a deep discount. Price could just go up and use that as a breakaway gap to go higher. So, I mean, like, what's the difference in R between here and here? Like, it's really not much, right? So I could have just entered there just to be safe. And aim for 1 to 3. It's you right here. Which if I was patient, would have never gotten. That's fine. But, you know, most of my trade would have been out. In fact, I would have been completely out around 4 o'clock, right? Which is right here. Once it's 4 o'clock, I'm out. But this is a 3 minute. I think, let me see if there's anything nice on the 1 minute. Yeah, nah, basically same thing on the 1 minute. But yeah, so that's basically all the 22 models that we saw for today. You could see this is a really nice strategy that repeats itself. It's very easy for you to kind of see it. And also at the same time, you can wait for price. You know exactly where to get out. You know how to get in. I did a really good video on R to R. You know, the best like reason why I'm doing a 1 to 3 and how to manage your trade. You can check it out in my general ICT trading concepts playlist and how to trade the ICT 22 model playlist as well. But yeah, make sure you like and subscribe. And if you have any other questions, feel free to put it in the chat. Peace and love, guys. See you next time.